Welcome to the International Entrepreneurship and Investor Conference, KwaZulu-Natal, coming to you live from the International Convention Centre here in Durban, KwaZulu-Natal. Our focus for the next hour is the growth, driving markets in emerging markets, winning on the African continent. If I can take a moment to introduce my panelists from my immediate left. I am joined by Mr. Bame Pula. He is the founder of March the 4th Investments. We then have Ms. Bongi Kuneni. She's the Director and Head of Public Sector Banking at Standard Bank. Mr. Michael Mabuya Kulu, he is the MEC for Economic Development and Tourism. And we are joined by Mr. Bill Russo, Director, McKinsey and Company, by Mr. Yusuf Dodia, the Chairman, Private Sector Development Association, Zambia, and by Mr. Roddy McKean. He is the head of the Africa Group, Weber Wenzel. Thank you all for joining us for this session. Let me start in terms of which markets you deem to be winning on the African continent. Bame, I'll give you each the stage for around about 1 minute, 30 seconds, and we'll take that format from there.
Thank you, Bronwyn. I think the exciting thing about Africa today is that there's a very broad base of countries that are winning. Some of those have been established for quite a while. Some of them have come to the forefront more recently. Some of them started producing natural resources more recently. However, what I think is most interesting and exciting are the frontier markets, which have previously been very underrepresented within investment trends in Africa. And amongst those, the country that I find very exciting is Ethiopia. Ethiopia has a population of 85 million people. It's a country that recently demonstrated its increased stability with the change of presidents in the country that went relatively stable, in a relatively stable manner. It's a country that's been having a lot of liberalization of industries and increased private capital investment, including by major international companies in the form of FDI, and also increasingly by several international private equity firms. And in fact, I was recently speaking to a friend of mine who runs an international Pan-African medical equipment company, and he was mentioning that Ethiopia is actually the largest and fastest growing country. And so I think while there are a number of countries which are at the forefront of the conversation, there are some other countries which are emerging into the conversation which we must pay a lot of attention to for the coming years.
And if we may just add there that the World Economic Forum for Africa recently held in Addis Ababa in Ethiopia in May 2012, just adding to the momentum that we're seeing in that territory.
Absolutely.
Bongi, if you could take the stage from this point.
For me, I wouldn't say that it's one country that would be deemed the best in terms of being a frontier market. I would look at it as in regions. There have been very good developments in West Africa. Some of the countries there would be the usual suspects, Nigeria, Ghana, but maybe that some have been overlooked. Sierra Leone is doing really well. Liberia also is doing really well. Looking at another region, East Africa, I think there are a lot of good developments there. Ethiopia has been mentioned. I think I would pick up Rwanda, pick up Tanzania. A lot of good is going on there. You see focus, you see businesses prioritizing the effort on growing themselves, cleaning up their balance sheets, and just going out and making profits. So a lot of good growth is happening in East Africa.
MEC, if you could add your voice on this front.
Well, from where we stand as government, we think there are a number of things that the emerging economic frontiers in the African continent needs to consider, including us in that regard, that we are looking at that prospect of growth as well as Natal. For us, the first important thing as a province is about picking up the winners. And in this instance, not only will we be learning from the best, but we'll also be emulating highly successful countries such as South Korea, that we're actually seeing them growing in leaps and bounds. So the question of picking up winners is fundamentally crucial. Where our strengths, which sectors of the industry and manufacturing where we're highly capable, where can South Africa maximize and was Natal maximize? The second point for us, which we think is fundamentally important, is around us using the public fiscus in a manner that has got both the pull and push factor, so that we are able to ensure that doing business in that market is actually making your own companies to become competitive. Therefore, the state spending in that regard, being put in the right investment in the right areas, becomes crucial. The third area which I think is important is availability of capital. In the South African market, not only are we seeing capital available in the private sector space, but we are seeing the state that is actually committing its resources into boosting the economy, boosting growth, allowing investors to be able to make use of opportunities of finding new markets because of what is happening in the OECD countries and the developed markets. In this instance, it is important that we have got a 9 billion job creation fund, which in itself is actually attempting to ensure that we are enticing investors to come in, but also to create jobs. We also have got, and this 9 billion is with the DPSA, the Development Bank of Southern Africa. We also have the 10 billion Grow E scheme, which is with the Industrial Development Bank, Development Corporation, the IDC, which is there to try and ensure that we encourage investors and investments to take place in the South African market. But we also have got the 5.75 billion Manufacturing Enhancement Competitiveness Fund with the DTI, the Department of Trade and Industry in the country. All of these resources are geared to ensure that you complement the availability of capital which is in the private hands. The last point I think is important for us from where we stand is the whole question of addressing the superstructure of the economy. Therefore, ensuring that whilst we are attracting investors to come into your markets, in your destination, but we also have got measures to empower your own citizens so they can become major players in the economy. They're not at the periphery of the economy, but they're also in the mainstream of the economy activity. It's fundamentally important because it is a huge risk if you actually leave your own people. That's what we call it geopolitical terms, a major risk that can actually affect you negatively. And I think for all of those who are capable of doing this, they are likely, therefore, to be able to grow in leaps and bounds.
Bill, which markets are winning?
Let me just start. I think the exciting thing is that the top 30 economies in Africa, all of them grew over the past decade, and actually 27 of them accelerated. The work that I do, which is around consumer goods and retail, though, I would have to say that the most interest tends to be in Nigeria. It's typically the first question that we're asked when about Africa entry strategy. With 160 million people and growth at 7%, it's very, very, very exciting. That said, I think there's an additional part of the dialogue which is around cities. So we shouldn't just focus on countries, we should think about cities as well. And the fact is that if you look at the projected growth in the continent, about 50 cities are going to drive nearly 40% of the growth, and if I expand that to 200 cities, it comes to almost 2/3. So cities are an alternative way to look at it, and many are actually thinking about it in that light rather than just countries.
Yusuf, is it going to be Zambia?
Well, I think the big challenges that we have in terms of development in Africa is developing a national agenda with a national strategy. And the strategy's got to take into account the proverbial natural resources, the old and new partnerships, and looking at how we can leverage in this configuration. The human resource skills or lack of skills and capacities, and the development philosophy, foreign direct investment and its linkages to domestic investment. And then, of course, there's the political and regional issues, and this is political pressures, promises, and expectations, and balancing that against the global pressures of the WTO, the G7, and now, of course, BRICS. And I think the country that seems to have a winning formula, in my opinion, is the pioneer of Pan-Africanism, and that's Ghana, very closely followed by Zambia.
I knew you were going to slip Zambia in there at the end of the discussion. Roddy, if we can get your thoughts on this front before we move on into the broader panel discussion.
Sure. I think my basic answer is it depends. Because I think it depends on what industries people are investing in. Because different scenarios take place in different countries depending on industry, whether the government is involved, whether concessions are required, et cetera, et cetera. And I think different approaches are required. I mean, I think if one is looking at where we're seeing increasing activity from our client base, obviously many of them have been active in places like Nigeria, in Kenya, in some of the surrounding countries around South Africa. Where we're seeing an increasing interest are the countries who have got recent discoveries of natural resources, particularly oil and gas. So Mozambique, Tanzania, Uganda, increasingly Kenya, Ethiopia, and obviously Ghana, and potentially Cote d'Ivoire in Francophone Africa. But I think standing back from individual countries, I mean, I think the countries that are going to be the winners in the future are going to be the ones where the governments address international investor concerns. And those are the same in any emerging market, wherever you operate in the world. They're all about political and country risk. It's about transparency. It's about corporate governance. It's about local participation rules. It's about corruption. And it's also about the investment incentive regime, the tax regime, the incentives that are being offered to companies to invest in a country. And all of those, that mix of issues is important for investors. And of course, investors have a choice. And so they're going to make their choices, depending on their view of a number of these issues.
Roddy, you mentioned natural resources, and the question I'm going to put to Bill, because he nodded when you mentioned those natural resources, is that the first driver of economic growth, the discovery of oil? We mentioned countries like Nigeria, Angola, Mozambique more recently.
Ghana. It's interesting. We've clustered countries into 4 different clusters in Africa. We have a group we call the oil exporters. We have a group called diversified, transition, and pre-transition. And if you follow the roadmap of some of the East Asian countries and how they've grown, one of the most important things is diversification of the economy. So you look at the percent of manufacturing and services generated from economy relative to the exports. And what you'll find is that many of the oil exporters today in Africa are still relatively undiversified economies. And one of the challenges for them is to take that surplus investment and actually build a broader, more diverse economy as they go forward.
MEC, you mentioned that part of your strategy is to identify winning frontier markets. When you find them, do you take strategies that are deployed in those territories and then put them into the KwaZulu-Natal environment?
Well, first and foremost, let me say that I think one of the things, if I could build on what Bill was saying, is that in the context of us, we are a highly diversified economy. We're not relying on one particular commodity that is stimulating this growth here. And therefore, we think we should do so, even in countries where you may have an endowment of natural capital that you may be exploiting to the better interest of the whole country and of the whole people. But in the long time, natural capital and mineral resources in particular do not replenish themselves. And once you have been able to extract them, you've extracted them. Now, it's going to be important, therefore, that those economies must be diversified. And hence, therefore, we're focusing on diversifying our economy. The second thing is that as a country and as a nation, in the world of international diplomacy and international relations, what we would want to do is to create a win-win situation. As we actually engage markets that we think are crucial for us to have a relationship and to have a strategy of penetrating into those markets, we want to seek to create a win-win. A win-win for South African companies, KwaZulu-Natal-based companies, to be able to produce goods that can access those markets. But we also want to ensure that when you look at the question of the portfolio of trade and the balance of trade, and you find that the balance at the moment between South Africa's trading partners and those countries, it is skewedly in favor of those countries more than us, except in the areas of mineral resources that we're actually exporting to those countries. We want to export more finished commodities and more goods, and therefore we want to add value into the South African goods that are produced here, so that we become not only competitive in the areas of funding unfinished goods that become competitive in value addition. And therefore, we are very clear that in picking up those markets, frontier markets, that we think we should strategically partner with them, it must therefore ultimately be at the core of it a win-win, but also protecting our mutual interest.
Bongi, at the core of a winning frontier market must also be a healthy banking system.
Yes.
What's your opinion of the banking environment right now when it comes to the regions you were alluding to earlier, obviously East Africa, West Africa, and Southern Africa?
Well, in terms of West Africa, I think the leading economy there is Nigeria. The banks are regulated by the Central Bank of Nigeria. And I think under the current leadership of Mr. Sanusi, things have been going very well. He's been very direct, and he has tended to follow his words. Whatever he has put out as regulations, it's helping that economy. And in terms of any investor looking for certainty, you really are looking for an economy where there's predictability, where there's a roadmap when there are reforms. And we see that in the economy of Nigeria and also in just West Africa as a whole. Coming to East Africa, I think also that the banks are very well regulated. You see a lot of interest coming into those markets and economies. If I'm not mistaken, in Kenya, we currently have about 43 banks, including Standard Bank. Now, you wouldn't have all these international institutions there if the market didn't give us certainty, and if it was going to be impossible for the banking institutions to function the way that they expect. So I'm quite certain that going forward, we are going to see these reforms increasing and the environment being very clear for investors. And in general, I would say I'm very happy with how banking institutions are supervised in Southern Africa too, because we've got a very long history of the central bank governors within the Southern African Development Community working together. So what you see happening in South Africa also happens in other countries. It's a very well-regulated market. Thanks.
Bama, as a deployer of capital into African markets, do you feel that you are now spoiled for choice, that the competitive environment is heating up and it's difficult to decide where to deploy your money?
Well, I think that dynamic is changing. Several years ago, the market was much thinner. There would have been only a few countries really where one felt comfortable investing international private capital. That would have been mostly South Africa, Kenya, and Nigeria. What's happened more recently is the development of corporations in various sectors, increased entrepreneurship, increased access to capital and talent, most importantly, those two aspects by companies in different countries around the continent. And so more and more countries are becoming candidates for investment. And as Bill was saying, the amount of industries is becoming much more varied. Again, several years ago, you would have seen that mining and oil and gas were taking a larger proportion of private equity investment in the continent. Now it is broadening much more beyond that. Consumer and financial services sectors are taking the bulk of it. And I think going forward, manufacturing will also take a big portion of that, which is very exciting for the diversification of economies around the continent.
You mentioned diversification. The MEC earlier mentioned diversification and the importance of beneficiation. Yusuf, I'm coming to you, and the fact that you alluded to Ghana as the winning country in your opening statement. Do you think that that country now is taking the kicker that it's received from the discovery of natural resources like oil and laying the foundations for long-term growth along the route of diversification, beneficiation?
Absolutely. I think, and I'm not only speaking for Ghana as an example, but Zambia as well. When you look
You've
at
diversified beyond the copper belt.
Exactly. Ghana discovered oil, and they leveraged the discovery amongst the big players of the world. And in that deal, they were able to secure something like $13 billion of infrastructure development funds. And Ghana is clearly saying, we know that we have oil, we know it will run out one day, but by the time it runs out, we're going to have road infrastructure, rail infrastructure, I mean the whole works, to be able to have an economy that will be anchored on various other productive sectors. And in Zambia, we're doing exactly the same thing. You know, we're ensuring that the windfall of good copper prices are now going to become the investment capital that's going to diversify the economy, because you know, this is not going to be there for forever. And I think that this is really the way forward. I think the Bretton Woods institutions ought to be thinking twice about their future, because BRICS is on the heels, and a lot of the World Bank, IMF, IFC are going to become irrelevant in the next 10 years unless the game plan changes. And I don't think we're waiting. People in Africa can see opportunities and can see options, and we're all sort of diving in there to just get the best deal for Africa. And in Zambia, that's really our focus.
Roddy, do you think that the taps are going to remain open when it comes to foreign capital onto the continent?
I think we have to recognize that, I mean, I'm an Afro-optimist. I believe in the Africa story, and you know, I was very encouraged by Bill's presentation this morning. But I think we have to recognize that when Africa is looked at by international investors around the globe as being one of a number of markets that people can invest in, Africa traditionally has had a very negative press. If international investors look at Asia, China, India, Latin America, Africa is often at the bottom of the list. Because Africa has often been given a very negative press. And it's always the negative stories about Africa that come out. And of course, that is a particular perception, and I mean, I would certainly argue that the reality is very different from that perception. And a growing number of international investors are beginning to look at, I mean, already some are active, clearly, but a growing number are becoming more interested. But there's still a long way to go to persuade everyone that Africa is the ideal investment destination. People still think it's riskier than other emerging markets. I wouldn't necessarily agree, because as I mentioned earlier in my introduction, I mean, I think the same risks for investors you know, exist in China and India, which are much more buoyant and much more the focus of international investment than Africa. So I think slowly the perception is changing. But we still, I think, have a bit of persuading to do, and I think it's something which we all need to continue to do to market the opportunities and benefits and the positive side of investing in Africa, rather than allowing the focus to remain on the negative issues.
And perhaps, MEC, just picking up on that point, the perception and the change of perception. For a long time, the African continent has been one that is seen as needing, or has been seen as needing, capital. But now investors, as Roddy says, are potentially being presented with opportunities, moving from that shift happening from need through to opportunities, where capital is welcome and where it rewards those who invest. Would you say that that is a fair summation?
Well, let me say that I think for me, I fully concur with what Chris Hart was saying earlier. That if you look at the question of the political risks, where does it lie? And let's be honest and be truthful to ourselves. The risk is no longer lying in the African countries. It lies with the developed North. Because if you were to actually invest there, that's where the bigger risk lies. Secondly, if you look at the constitutional democracy and issues of governance in general around the geopolitical environment in the African continent, we really have actually improved tremendously. And it's for this reason that many people have actually been saying, if you see the leaders in the African continent and you see the AU, and why all of us have been actually focusing around strengthening the organs of the AU so that we can be able to ensure that will strengthen those organs of democracy. I just want to argue quite very strongly that I think if you see the kind of investment that is taking place in Angola, in Ghana, and in many other parts of Africa, it actually tells you that the investment community and the institutional investors have now woken up to the reality that not only is Africa is the next frontier for growth after Asia, but as the IMF report correctly indicates and succinctly put it forward, Africa is the second future after Asia for the world growth. And I think, therefore, it is an opportune moment that when we convene conferences such as these and we go into international platforms anywhere in the world, that those of us who come from this continent, we now have a responsibility and a duty to actually present a message that this continent is now ready, and this continent is actually open for business, and it is doing business with the rest of the world.
You mentioned Chris Hart, Bongi, earlier. Chris Hart complimented the KwaZulu-Natal provincial government on policies that they are deploying, attracting FDI. The question is a broader one. Who's driving the winning strategies across the African continent? Are we looking at public sector, private sector? Is it a combination of the two?
It certainly is a combination of the two. From a private sector perspective, I really want to say it's companies that grow and they make their economies to grow. So if we are looking at the drivers of economic growth in Africa, as in any place, I would say you have to count among many, but start with rising incomes. Rising incomes in Africa has made it possible for the economies of our countries to grow. It's also the returns on infrastructure investments which have taken place, some of it from a long time ago, but some of it it's pretty new. What you see in East Africa, for example, in Tanzania, it's returns of having a well-functioning port. It's increasing, it's contributing to the growth there. But also, it's countries and companies from those countries which are seeing opportunity in Africa. So companies from Brazil, from India, from China have come in big ways into our space because they see that by investing in infrastructure, they get better returns. There's also another angle to the Africa story that we continue to get remittances from citizens of Africa who are elsewhere. The more we get those remittances, the more we grow. And the activity in our stock exchanges also picks up our growth.